Yes, students. Now we will start with the most important chapter in income tax, that is the tax rates. Sir, why is it so important? Because there are a lot of amendments in this chapter, guys. So amendments plays a major role. There is change in tax rates, rebates and all. So I will be covering each one of them in detail, and we will also solve good number of questions. So please be attentive. This chapter will also have an impact on the upcoming chapters. So learn it well. And there are a lot of things for you guys to remember, to retain in your mind. Please make sure you are studying with attention. Because later you might ask, sir, should I remember this? Should I remember that? Anything covered in the syllabus you have to remember. But whatever is covered in this chapter, more of the things like amount limits, percentage, there are many things to keep in mind. So please make sure that you are getting it in the right way. Fine. We will start. So chapter 2.1, whatever I have made as per my provision book, guys, see, as per the ICS study material and all is not a separate chapter. It is actually a part of chapter 1 itself. But I am doing it as a separate chapter. Why? Because I want to cover everything related to tax in one chapter. Everything related to tax in one chapter. That is why we will be seeing it here. And obviously, when we go further also, we'll be trying to recollect this chapter again and again. Fine. Tax rates for different types of assesses for assessment year 26-27, which is applicable for you. Charge of income tax. Section 4 is a general charging section, which tells what is the tax. We learned it in first chapter. What is it? Total income of a person earned in previous year is chargeable to tax in assessment year. So, section 4, let us break down that into parts. Section 4 of Income Tax Act 1961 is a charging section which provides that tax shall be charged at the rate prescribed for the year by Annual Finance Act. We already saw what is Annual Finance Act, which is the Finance Act applicable for your exam 2025. Okay. And which year is the starting year for you, or which is your previous year 25-26? What is the starting date? 1st April 2025. So before the year start, do you know what is the rate? You know the rate because Finance Act is already been effective from 1st April. So will you know the rate from day one? Yes, sir. Finance Act 2025 is applicable for you, which is effective from what date? 1st April 2025. So before I begin the previous year, before I start earning the income, will I know what is the tax rate I need to pay if I earn so and so income? Yes, sir. The charge is on every person specified under section 2 clause 31. Means whoever is having the income, any person who is covered under 231, you know 231 covers everyone. Yeah. If these guys have income, then we will charge tax. Tax is chargeable on the total income, not only on income. We should use the word total income. And how to calculate total income, sir, we learned in the last previous chapter. That is not the end. Actual story, actual picture will start from next chapter. We will see there. Clear? Last chapter, whatever question we solved was only on section 5, section 6, scope of total income. But total income calculation is little bigger, which we'll be starting to learn from next chapter. Okay. Tax is chargeable on total income earned during the previous year and not the assessment year. Okay, guys, what tax rates is applicable for previous year? You need to pay tax as for that. But when will you pay? In assessment year. Because some of you might be confused. Sir, you told the previous year applicable for us is 25-26. That means Finance Act 2025. But we need to pay tax in assessment year, no, sir. So should we pay tax as per Finance Act 2025 or Finance Act 2026, sir? Finance Act 2025. Because what is the tax rates applicable for you for previous year is applicable. Because you have earned the income when? In previous year. So your tax liability is for which year? Previous year. But you are discharging it in the assessment year. Doesn't mean that the tax rate applicable for assessment year will be applicable for you. No, no. You have earned the income in previous year. So whatever is the tax rates applicable for previous year will be relevant to you. There are certain exceptions like when you will have to pay tax in assessment, previous year itself. Which are those we already covered in first chapter. That is covered in section 172, 174, 174A, 175 and 176. That is the shipping business of a non-resident shipping company, or then person living in India permanently, or transfer of property to avoid tax, those things. Tax shall be levied in accordance with and subject to various provisions contained in the Act. So, sir, can I simply tell how do we calculate the tax? No, we should know the entire provisions of that. Because in one place they would have told something, later they will tell, no, no, special cases this is applicable, exception this is applicable. So, should we know both? Yes, we should know both. Even when it comes to tax rates, there are two category of tax rates, guys. One we call it as normal rate, the other one we call it as special rate. Are we supposed to know both? Yes. Because depending upon what income I have earned, I need to pay the respective tax. Rates of tax. Where the rates of tax are given, guys, there are two types of tax rates as I mentioned. One is called normal rate, the other one is called special rate. The tax rate for normal income is called normal rates, which is given in Annual Finance Act. Whereas the tax rates applicable on special income is called special rate, which is given in Income Tax Act under the respective section. So, total income, we need to divide it into two parts. First, check whether total income includes any special income. Sir, how will I know? Once we learn this chapter, you will know what is special income. So, check whether assessee has earned any of this income. If yes, then special income has to be taxed at special rate. Rest all is called normal income. Taxable at normal rate. Clear? What is special income? What is the tax rate? Everything is given. We will learn in this chapter. Okay, guys, whenever there is a question on tax liability, first we need to calculate tax liability on what? Total income. But first check whether total income includes any special income. Okay, so you will know. Once we learn this chapter, you will know what are special income. First check whether there is any special income. If yes, calculate the tax on special income at special rate. Where is it given, sir? In Income Tax Act itself. There are few sections like 111A, 112, 112A and all of Income Tax Act. There they have told what is the special income covered, what is the rate. We will apply that. And this is same for everyone. This is same for everyone. Means whoever is having special income, tax rate is same. Whether it is individual, company, firm, or individual following default scheme, optional scheme, doesn't matter. Rate will always remain same. Rate will always remain same. Remaining is considered to be normal income. Sir, in the act, have they told what is normal income? No. They have told what is special income. Anything which is not special, normal. What is foreign company? Which is not domestic. Same day. What is domestic they have given. What is not domestic is foreign. Same day. What is special they have given. If they have given any income, which is not special, it is understood it is normal. Taxable at normal rate. Where is this rate given, sir? Finance Act. Sir, is it same for everyone? No. It will vary from person to person. If I am a company, separate rate. If I am an individual, separate rate. And if I am an individual following default scheme, the separate rate. If I am an individual following optional scheme, different rate. Yeah, it will vary. From scheme to scheme, from person to person, it will vary. That is what I have given here. Okay. And tax rate of the tax rate depends on various things like the category of person, whether in an individual, partnership firm, company, cooperative society, like that, because different rate is applicable for different one, and that is especially for normal income. Whereas for special income, it will always be same. If you want, you can mention in bracket normal income. Then amount of income. Amount of income, because higher the income, not you will end up paying more tax. Then residential status. In few cases, it will matter. Not every time, especially for individual, it will matter. Especially for individual, it will matter. Then age also, obviously for individual. For company, partnership firm and all, age doesn't matter. Sir, they will give you company incorporated 90 years back, 100 years back. It will not make any sense for us. It will not make any difference for us. Then type of income. Type of income I have covered you. Special income, normal. Two type of income will be there. Yes. These are some basics before we start with this chapter. We'll move forward. From now, we'll start discussing the tax rates. First, we will discuss it from normal rates. Then we will see the special rates. Guys, be attentive. Now, something important I will explain. So, before we see the rates, guys, we are now seeing the tax rate for first set of people or first set of persons. Who are those, sir? Individual, HUF, AOP, POI, and artificial juridical person. So before we see tax rates, I just want to explain one thing. This is not there in the material. Just observe. If you want, you can make a note of it later. I will give time, but first pay attention. Tax rates, guys, these are not the only people. There are other people like company, firms and all. But this is the most important thing for you. Other things are actually comparatively easy. Tax rates we are now discussing for whom? Individual, HUF, AOP, BOI, and artificial juridical person. Guys, these people have two options. They have two options. One is default scheme, the other one is optional scheme. See, default scheme is by default. If you are not mentioning anything, it is understood you are following default. No, no, sir, I don't want default. Can I follow optional? Yes. In that case, you have to opt out of default and follow optional. Very simple, guys. You know your mobile settings, settings. When you switch on, assume you have bought a new mobile and you are switched on. Already few settings will be there, not by default. Now I don't like that, sir. So I want to change. Can you change? Yes. Font style, that, this, everything you can change. Most of the things. Yes, sir. So if already some settings is there, which is default. If you don't want, you can change it. Same way here. So default scheme is actually given in section 115 BAC of income tax. So these people are assumed that they are following it. No, sir, I don't want that. Can I opt out of it? Yes, for them second chance is given or second option is given under optional scheme. Clear? Yes. Sir, what is the difference between these schemes, sir? I'll just give you highlights. Let us see that. Okay. First one. Where is it covered? Default scheme is covered under section 115 BAC of Income Tax Act itself. Whereas optional scheme, sir, where is the tax rates given? If the assessee is following optional scheme, it is given in the finance. For you guys, it is Finance Act 2025. Okay. Sir, is there any respective section for it? No. There is no section. Particular section for it is not there. Okay, sir. Then tax rates. Guys, under default regime, the tax rates are kept lower. Whereas under optional scheme, it is kept higher. Then you will tell me, sir, obviously everyone will follow default scheme only, sir. Yes, because the tax rates are kept lower. But there is one twist there. There is one twist there. Madam has given the benefit with respect to tax rate, but she has taken away majority of the deductions and exemptions. So if you are the assessee who is following default regime, then most of the deductions and exemptions are blocked for you. Blocked for you means you cannot claim it. You cannot claim it. So automatically what happens, guys? Your total income will increase. When you cannot claim deductions or exemptions, what happens? Your income will increase, right? Yes. So income will automatically increase, but tax rates are kept lower. Whereas under optional scheme, exemptions, deductions are available. So accordingly, income will come lower, but tax rates are kept higher. They just played a game, that's all. Okay, because if the people see, common people will understand what? Only this. Oh, tax rates have been reduced. Thank you. Yeah, same way they have told, thank you, we will not give this under the default regime. Clear? Because obviously we should know, as a professionals, we should know if these are not available, obviously the total income under default regime will shoot up. Maybe tax might come lower, but still total income will shoot up. Yeah, yes, sir. Now, choice is how, sir? Guys, first choice is always for default. No, no, sir, I am not liking it. Madam is disturbing me with blocking the deductions and exemption. Can I opt out of it? Yes, you can opt out of it and follow optional scheme. Under optional scheme, we are free to claim exemptions and deductions, guys. Clear? And see, majority of the deductions and exemptions are blocked here. Not everything, but majority. Whatever normal people are dependent on, like ATC, HRA exemptions and all, or ATC deductions and all, everything is blocked. Most of the important deductions only is blocked. Okay. And sir, when will you teach that when the deductions or exemptions are blocked? Guys, I will not be teaching it in this chapter. I will be teaching it under the respective head. That is, there are 5 heads of income. Now, once I cover each of the head, at the end of each head, I have given a table telling if assessee follow default regime, so and so is not available. So and so is not available. Why, sir? Simple reason. Because as on today, you don't know what is that exemption, what is that deduction. If I explain what is the deduction and exemption first and then tell this is not available for default scheme, then it will make more sense, is what I kept. Clear? I have given the list here. In this chapter, I have given the list, but I will not be explaining that list today. I will be covering it bit by bit under the respective head. Once I cover all the chapters, if you come back and see the list given here, we would have covered it. We would have covered everything but chapter wise. Okay. So first choice is always default. If I don't want that, I can go for option. Now you might ask me, sir, do I have a freedom every year to choose whichever I want. So wherever it is lower, I can follow it. Is it so? Yes, provided you don't have business or profession income. Now, if you are an assessee who doesn't have any business or professional income, every year what you do is you calculate your total income under both the regime. Calculate your tax liability. Whichever is lower, you follow it. That is more beneficial for you. You have that choice. Every year you can follow it. Sir, this year I followed default. Next year I felt like following optional. Next to next year again I want to follow default. Can I keep on switching? Yes, you're a free bird. Provided you don't have PGBP. Sir, when should I inform which scheme I am following? At the time of filing the returns. When you are filing the returns, they would have given in the first instance itself, in the first page itself, they would have told you want to follow default or you want to opt out of default. Clear? If you are opting out of default, it is understood you are following optional. And if you are following default, and when you are filing returns, it is online. Whatever deductions you are not eligible, everything will already be blocked. Even if you want to go and enter the amount, it will slap on you and tell not available. Go. Clear. But academically, sir, do we have any software like that? No. You have to know the list of what deductions are not available. Should we retain it? Yes. Whoa. Hope you understand. I repeat. If I am an assessee who doesn't have an income under the head PGDP, that is, I don't have business income, I don't have profession income, then every year I have a freedom to choose between default scheme and optional scheme. Got it? Yes, sir. So every year, what do? I will compute the income and tax liability under both the schemes and choose whichever is lower. Choose whichever is lower. Okay, sir. Actually speaking, now default regime has more benefits with respect to tax rates, rebates and all. More benefit is under default regime, but the only disadvantage is we cannot claim exemptions and deductions. Okay. In the current year, means in Finance Act 2025 also, they have changed the tax rates, but only under default regime. Even there is something called as rebate. The rebate limit has been increased. That is also only under default regime. Okay. Sure. Now, sir, what if I have income at the head PGB? That means I have business income or professional income. Guys, I need to choose which scheme I am following before the due date of filing the returns. The due date of filing the returns is given in section 139 subsection 1, which we will see later. Within this due date, I need to choose which scheme I am following. If I am silent, it is understood that I am following default. But if I want to opt out of default, then I have to choose it before the due date of filing the returns. Okay, sir. Now, listen, interesting. Sir, assume I didn't file my returns within the due date. I didn't choose which scheme to follow. By default, it is default. By default, it is default. Now, sir, I want to follow optional. Time over. Sir, then how can you file return? Belated return you can file. Belated happy birthday. You know, same way, belated return you can file after the due date. But if you are filing belated return without informing which scheme you are following, you are forced to follow default. Okay, fine. Now coming back. I have an income from business or profession. Now it is always understood the day I start my business, I am following default regime. Default regime. No, sir, I don't like it. Can I switch out of the default? Yes, you can follow optional. Sir, I didn't like optional. Too much rate. Can I come back to default? Yes, you can come back. Sir, I'm not liking it. Can I go back to optional? No, thank you. You are blocked. You are blocked. You have to continue with default. One switching over is given, but not again and again. Hope you understood. I repeat. First, once you start your business or once you are having a business income, it is understood you are going for default. Once you can go to optional. Once you go to optional, continue under optional for any number of years. Sir, I don't want optional. Can I come back to default? Come. But once you come back to default, doors are locked. You cannot go out. Sir, can I go out? If you want to go out, shut down your business. That is the option given. Actually, seriously speaking, shut down your business, then you will become a free bird again. Correct now? You will come here. Hope you understand. Hello? React. Okay, if you don't react, I will start talking to walls. Okay, at least they will start reacting. They will feel pity about me. Listen, I will repeat. Whenever we have an income under the head PGBP, that is business or profession, it is understood we are following default. I don't like default. I want to follow optional. Can I go? Yes. Once I go to optional, I have to continue with optional. No, sir, in some year, I felt default is better. Can I come back? Yes, you can come back. Once you come back, you will continue with default forever. Sir, I want to follow optional. No chance. Hope you understood. Sir, I want to shut down my business, sir. Now, will I become free? Yes, you will fall in this category. Hope you understood. Now, you might also have it out. Sir, in the first year itself, I want to follow optional. Is it possible? Yes. First year itself, by default, it is 1. You are switching out of default. That means you are going here. You can again come back to default, but never go back to optional again. Hope you are understanding. And sir, optional, once you go to optional, it is understood you are continuing there. If you come out, then again, you will come back to this option. Hope you are understanding. Because, sir, once I go to optional, every year should I switch? No. It is understood that you will continue under option. Hope you guys got it. So this just an highlights. This just an highlights what I have given. Fine. Just make a note of it. You can take down. We'll discuss everything, tax rates, everything in detail. We will discuss. Take downs. Yes. Now we will go and see what are the tax rates applicable under both the schemes. Under both the schemes. First we will learn default scheme, then we will see optional scheme. Guys, we are learning the first category of persons. Who are those? Who are those? We are now learning the tax rates applicable for first category of person. Who are those? Individual, HER, AOP, BOI, and artificial juridical person. In simple, I call them as slab rate assessors because whatever tax rate is applicable for them is slab rate. And one more important thing, now whatever we are learning is the normal rates tax. We will take up the special rates later. Special rate is same for everyone. Every category of person, irrespective of which scheme they are following. We will learn that later. Now we will first focus on normal rate. Normal rate depends on which scheme the assessor is following. First, we will learn the tax rates under default scheme. Okay. Income taxable at normal rates, that is gross rate or base rate, we call it as the alternate names. Individuals, HEF, AOP, BOI, and artificial juridical person can pay tax at concessional rates under concessional rate because the rates are kept lower under default tax regime as per section 115 BAC. As per section 115 BAC of which act? Income Tax Act 1961. Section is given not in Finance Act, but it is in Income Tax. However, E or it has to forego certain exemptions and deductions. So if you are paying tax as per default scheme, then you have to forego few exemptions and deductions. Alternatively, they can exercise the option to shift out of default tax regime and pay tax under the optional tax regime as per the regular provisions of the Act at the rate given in Annual Finance Act. We call this as optional scheme, guys. See, please be careful. For optional scheme, the rates are not given in section. It is given in Annual Finance Act. Sir, is there any specific section for it? No. There is no specific section for it. See, we either call it as optional scheme or we also call it as regular provisions of the Act. Regular provisions of the Act, one and the same. One and the same. And one more thing I want you guys to know. See, now it is called default scheme and optional scheme. But previously, when the scheme was introduced, it was called new regime. And whatever was already there was called old regime. Okay, they used to call new regime, old regime. Now also some people call it as new regime, old regime. But actually as per the law, name is given as default regime, optional regime. Default was previously called as new regime, whereas the optional scheme was called old regime, which was already there. Okay. But as of now, you guys don't use the word new regime, old regime in your exams or in your answers. Use the word default or optional. Okay, sir. First, we will see what are the tax rates under default tax regime. Yes. Default tax regime under section 115 BAC of Income Tax Act 1961. Guys, I have highlighted it in italics. Can you observe it? Yes, this is an amendment. Important. Important. So there is an amendment in this tax rates. Previously, the tax rate was different under default regime. Now there is an amendment through Finance Act 2025. So what is it? We will see. Any individual, whether they are resident or non-resident, irrespective of their age, and every HUF, AOP, BOI, and artificial juridical person. Sir, what is this HUF? Hindu Undivided Family. AOP means Association of Persons. BOI means Body of Individual. AJP means Artificial Juridical Person. Okay. So what are the tax rates? Total income from all the sources except income taxable at specified rates, means they're telling this is not the special rates. Clear? So in simple, for your normal income, this is the rate applicable. So what is the rate, sir? Guys, we call this as slab rates. Why so? Because higher the income, higher will be the tax rates. It is called slab system. So if you have an income up to 4 lakh, we call that as basic essential limit, no tax. 4 lakh to 8 lakh, 5%. 8 lakh to 12 lakh, it is 10%. 12 lakh to 16 lakh, it is 15%. 16 lakh to 20 lakh, it is 20%. 20 lakh to 24 lakh, it is 25%. Last, above 24 lakh, any amount, 30%. 30%. We call this as slab rates. Guys, easy to remember. For every 4 lakh increase in income, tax rate will increase by 5%. Actually, now it is easier, more easier. Okay, previously it was bit odd figures, but now it is easy. For every 4 lakh increase in income, tax rate will increase by 5%. Maximum it's 30%. Don't keep on increasing till 100%. Okay, maximum tax rate is 30%. Now you might ask me, assume an individual who is following default regime has a total income of 30 lakh, which is completely normal income. So 30 lakh, no sir, more than 24 lakh. So straight away 30%, huh? No. We need to do snap calculation. Clear? Sir, how is it? I will just show you a question which we will discuss later. I will just show you to understand the pattern, that's all. Okay, no need to take down. We will discuss it later. Assume in this case the question income is 26 lakh. Sir, when income is 26 lakh, how do we calculate tax? I have given here. Up to 4 lakh, it is nil because it is basic essential limit, zero tax. 4 lakh to 8 lakh, how much? 5%. So what is the difference between upper limit and lower limit? 4 lakh. That is 8 minus 4 lakh into 5%. So 4 lakh into 5% comes to 20,000. Next, from 8 to 12 lakh, 10%. What is the difference between upper limit and lower limit? 12 minus 8, 4 lakh into 10%. Into 10% comes to 40,000. Same way we need to continue. Same way we need to continue. Clear? This is called slab calculation. We call this as slab rates. Hope you guys can just observe the figures. No need to take them. I have told you we will discuss this. This is a question which I will solve later. Okay. Shut up. I will go back. Okay. Fine. So we have understood the tax rate. Let us repeat once. You guys repeat along with me. What is the tax rate? You need to remember all this. Come on. Up to 4 lakh, nil. 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, more than 24 lakh, 30. Is that clear? Yes, sir. Now, if an assessee wants to follow default regime, he need to satisfy certain conditions. What is it, sir? See, this is the tax rate applicable. But while calculating total income, he need to follow few conditions, or there are some restrictions. What are those? While computing the total income of an individual HUF, AOP, BOI, and artificial juridical person who is following the default regime, the following exemptions and deductions not allowed. Not allowed. I have given the list to know. These deductions and exemptions are not allowed, guys. Sir, are we going through this list now? No. I will be covering it chapter wise, guys. Once we cover all the chapters, I would have covered all these items. You can come and cross verify. Clear? When you are studying next time, this will be helpful because everything will be in one place to study. Whereas when we are learning chapter wise, I will be covering. Once I cover the complete chapter at the end, I will have a separate table telling if assessee follow default regime, which he cannot claim. Which he cannot claim. So it would be easy for you to connect with the chapter and study. Okay. Next, Even few losses cannot be set off and all. This also I will cover it chapter wise, guys. Then depreciation also, there are few restriction. Maximum depreciation which an assessee who is following default regime can claim is 40%. Okay, I will cover all this in the respective chapter. The last point here is AMT. AMT means alternate minimum tax. This is a special provision applicable for the assessee who is claiming few deductions. And this I would be covering it as a last chapter. In the last chapter, you can see chapter 10 is alternate minimum tax. But alternate minimum tax provision is not applicable for the assessee who is following default regime. For them, there is nothing called AMT. So that means if I am the assessee who is following optional scheme, AMT would be applicable? Maybe yes. Because there are certain conditions given. Only if the conditions are satisfied, AMT is applicable for you. We will see that in chapter 10. So as of now, just know one thing. If assessee is following default regime, no AMT. Okay. Then coming to time limit. Sir, if I want to follow optional scheme, default scheme is by default. If I want to follow optional scheme, then what, sir? I already explained it. Let me repeat it. Guys, here, for this purpose, assessee is categorized into two types. Assessee not having business or professional income, or in simple, I can tell, assessee not having the income under the head PGBP. They have a full freedom. Every year, what they can do? They can calculate what is the total income under both the scheme. It will differ. It will not be same. Okay. Then calculate tax liability under both the scheme. Whichever is lower, they will follow that. Don't follow wherever income is lower because tax rates are different. You need to follow wherever tax liability is lower. Wherever tax liability is lower. I have a freedom. Every year I will do calculation. Whichever is lower, I will follow. Every year I can keep on switching. Then, sir, what if assessee has business income or professional income? Then you have some restriction. What is it? First, you are assumed that you are following default regime. Sir, I don't want default regime. I want to follow optional regime. Go. And once you go there, continue there itself. Even in the upcoming year. No, sir, in some year I felt I don't want it. Can I come back to default? Yes. But once you come back to default, you have to continue with the same. Got it? Yes. Sir, if I shut down my operation or assume I am winding up my business, then am I having a freedom like before? Yes. You will fall in this category in that case. You will follow in this category. That is what is mentioned. Whatever is given in this paragraph is whatever I mentioned. And one more thing. Sir, if I am covered in this point where I don't have any business or professional income, if I am opting out of default regime and following optional scheme, when should I inform? At the time of filing the returns. Whenever you are filing the returns, just inform. Means you need to choose there. Which one are you following? Even if I am filing belated returns, sir, yes. But when it comes to if you have an income from business or profession, you need to inform. If you are opting out of default regime, you need to inform within the due date of filing the returns. Sir, I didn't file my returns within the due date. I am filing belated return. Then by default, you have to follow default scheme. Hope you guys are catching it. Yes, sir. Sure. So this was the tax rates given under default regime. Okay, sir. Now, no, sir, I don't like you are telling all these are blocks, that, this, and all. I am an independent person. I want freedom to fly wherever I want. However, means I want to claim whatever deductions I want. Then you will follow what? Optional scheme. If you want to follow optional scheme, what should you do? You have to opt out of default regime. Opt out of default regime. So if I am following optional scheme, which is also known as regular provisions of the Act, what is the tax rate applicable? Tax rate prescribed by Annual Finance Act for optional tax regime. The slab rates applicable to an individual HUF, AOP, BOI, and artificial juridical person which has exercised the option of shifting out of default tax regime are as follows. So in simple, those who are following optional scheme. These rates are for those who are following optional scheme or optional regime guide. There is no amendment in this. Whatever was already there, same thing has been continued. Amendment is only in default regime. Okay. What is the tax rate, sir? Yeah. Any individual, whether resident or non-resident, every HUF, AOP, BOI, and artificial juridical person, their normal income, not special income. Special income we will see later. Up to 2,50,000 is called basic exemption limit. Tax rate is nil. 2,50,000 to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. More than 10 lakh, 30%. Clear? So you can observe here, slightly higher. About 10 lakh, only 30%. There it was about 24 lakh, 30%. Clear? Yes. And please be careful here, only three rates 5, 20, 30. No 10, no 15, nothing. Please remember it proper. Okay. This is the rate applicable for slab rate assessee. Who are those slab rate assessee? Come on, repeat along with me. Who are those? Individual, HUF, AOP, BOI, and artificial juridical first. But if an individual is resident, age 60 or more at any time during the previous year, but less than 80, means 60 or more, less than 80, then for them, basic exemption limit will not be 2,50,000, it would be 3,50,000 more. Papa, senior citizen, no. So during their tenure, they have paid more tax. Now let us reduce burden. Okay, yes. They are not telling tax free and 50,000 extra limit. That's all. Okay. Next, sir, what if a resident individual is aged 80 or more at any time during the previous year? At any time during the previous year, 80 or more includes any number after 80. Okay, now, yes. In that case, basic age limit is 5 lakh. First lab is not at all there. You can observe. Next one, 5 lakh. First slab is not at all there. 5% slab is not at all there for them. Hope you guys are getting. Please be careful. This higher limit is available only for resident individual. Sir, I am a non-resident individual. Scored century 100 years. What is the basic age limit for me? 2,50,000. 250. Yes. Let me read it. Let me read it. Resident individual who is of 60 years or more, but less than 80 years at any time during the previous year. Means, sir, I tested 60 years in previous year. Am I eligible for this? Yes. Sir, I am celebrating my 60th birthday on 31st March, last day of previous year. Am I eligible? Yes, enjoy. There is also a circular telling if you are celebrating your 60th birthday on 1st April of assessment year. 60th birthday when? On 1st April of assessment year. You are still eligible for 3 lakh. How come, sir? They gave a clarification telling if you are celebrating your 60th birthday on 1st April of assessment year, you have completed 60 on 31st March only. Enjoy. This clarification is only for those who are born on 1st April and who is celebrating their 60th birthday on 1st April of our assessment year. Clear? Sir, I am celebrating my 65th birthday, 67 to 68 for you. Doesn't matter. You're eligible. 3 lakh. Go enjoy. Understood? Yes. Chalo. You can see up to 3 lakh basic exemption limit nil. Next 3 lakh to 5 lakh 5%. Rest will be same. Rest is same. Next, sir, I am. This person is called senior citizen. Next, resident individual who is of 80 years or more. Superman. Here, yeah, this generation, if you have crossed 18, that means you are Superman. Okay, or Superwoman. Or else now girls will stand. Chalo. At any time during the previous year. Means in simple, we call them as super senior citizen. Okay, you don't use the word Superman and all. Just for the sake of telling, I told, super senior citizen. What is the basic age limit? 5 lakh. Up to 5 lakh, nil. 5 to 10, 20, more than 10, 30. Please remember it. And this higher exemption limit is there only under optional scheme, only for resident individual. Hope you guys are getting it. Sir, I am a resident individual, 90 years. I am following default scheme. What is my basic age limit? 4 lakh. Always 4 lakh. Fixed. Always 4 lakh. Fixed. And one more clarification. Even for this, they have told. If a resident individual is celebrating his or her 80th birthday on 1st April of assessment year, are they eligible for 5 lakh basic age limit? Yes. Because they are set to complete 80 years on 31st March. Clear? Yes. Now, you guys tell me. There is a resident HUF which is in existence for last 70 years. It is there from last 70 years and it is resident. Following optional scheme. What is the basic age limit applicable? What is the basic age limit applicable? 3 lakh. Yay! Individual includes HUF. This 3 lakh and 5 lakh is only for individual. ಕೂತ್ಕೊಂಡು ಹೇಳ್ದೇನೆ ಚಲೋ. If you are an HUF, AOP, BOI, artificial juridical person, always 250. And if you are a resident individual, underline, circle, do whatever you want there. Resident individual. Even if it is a non-resident individual, age doesn't matter. Always 250. Always 250. Done. So even these are called slab rates, guys. How do we apply it? I will just show you. 1 second. You can see this is how we will apply the slab rates under optional scheme. So in this case, assessee is having income of 16,50,000. How do we calculate the tax? You need not take down, just observe. Up to 2,50,000, nil. 250 to 5 lakh. What is the difference between upper limit and lower limit? 5 lakh minus 2,50,000. 250 you will get. Into 5%, 12,500. Next, 5 lakh to 10 lakh, 20%. What is the difference between upper limit and lower limit? 10 minus 5, 5 you will get. Into 20%, 1 lakh. Then more than 10 lakh, it is 30%. But here we have to stop at 1650. Why, sir? Because the total income is 1650. Is 1650. Stop at that point. Don't keep on doing. There won't be an end for it. Chalo. So 1650 minus 10 lakh, you will get 6 lakh 50 into 30%. 195. Clear? After that, I will explain. What is that? Clear? And assume assessee is following optional scheme, age is 63 or 82. Then will basic assessment limit change? Yes. You can observe. Here it becomes 3 lakh. And last case, it becomes 5 lakh. Small change. This is super senior citizen case. Okay, guys. Coming back. I'm just showing you how to apply the rates. We will solve those questions. Don't worry. Oh, hope you guys can remember. Let us recall. Come on, repeat along with me. If individual HUF, AOP, BOI or artificial juridical person is opting out of default regime and following optional scheme, what is the tax rates applicable? Up normal income, okay? Up to 2,50,000, nil. 2,50,000 to 5 lakh, 5%. 5 to 10 lakh, more than 10 lakh, 30%. But if an associate is a resident individual aged 60 or more, the basic exemption limit would be 3 lakh. So up to 3 lakh, nil. 3 to 5, 5%. 5 to 10, more than 10, 30%. Then, if a resident individual is aged 80 or more during any time of previous year, then the basic exemption limit would be 5 lakh. So up to 5 lakh, nil. 5 to 10, 25 is not there. Please be careful. By mistake, you may take it as 5%. For super senior citizen, 5% is not at all there. Okay. Next, more than 10, 30. Easy, no? Yes. Easy. Okay. So that is CBDT clarification, which I already told you. Note, CBDT has clarified that a person born on 1st April would be considered to have attained a particular age of on 31st March of the previous year itself. 31st March of the previous year itself. Therefore, a resident individual whose 60th or 80th birthday, very rare case, 60th or 80th birthday falls on 1st April 2026, which is our assessment year, would be treated as attained the age of 60 or 80 during the previous year itself. Okay. Sure. Then, what are the tax rates applicable for other category of person? Till now, we saw only for one set of people. Who are those? Individual, HUF, AOP, BOI, and artificial juridical person. They had two options. What are those? Default scheme, optional scheme. Both we are done with. And whatever tax rates we have discussed is the tax rates on cash income, normal income. So we call this as normal rates. Clear? Special rate we are not a test. We will see it later. Now we will see what is the normal rate applicable for normal income for other set of people, which is easy, guys. What is it, sir? The tax rates applicable for other category of assessee are as follows. Firms, LLP, local authority, same rate. They are different, but rate is same. Okay, and firm always includes LLP also. So what is the tax rate? A firm, LLP or local authority are taxable at the rate of 30% on their total income. And here total income is only normal income. Because if they have special income, special rate is applicable. Yeah, because in the law they have used the word total income only, but in the heading I have clearly mentioned normal income. Clear? And guys, please be careful. We call this as flat rate. What rate? Flat rate. Assume partnership firm has 1 lakh income. What is the tax rate applicable for them? 30%, 30,000. They have 10 lakh, 30%, 3 lakh. They have 1 crore, 30%, 30 lakh. They have 100 rupees, 30 rupees. No basic exemption limit for them. There is no basic exemption limit, guys. We call this as flat rate. Previously, whatever we learned was called as what? Slab rates. Slab rates, guys. Okay. Companies. For tax purpose, companies is divided into two categories. What is it, sir? Domestic company, foreign company. Foreign company easy. Let us finish first. Foreign company, what is the tax rate? 35%. Foreign company, what is the tax rate? 35%. Coming to domestic company. Guys, domestic company, please pay attention. Now it is a bit different. Domestic company have two optional schemes. They have two optional schemes. It is not called default scheme. Please be careful. They don't have anything called default. Hello, pay attention. Look here. For domestic company, they have two optional scheme. If they want, they can follow that. If not, they can follow regular provision. They can follow regular provisions. If they don't want to follow optional scheme, they are following regular provision. For them, there is nothing called default regimes. Please be careful. That was only for individual HUF and all. Okay. Now, domestic company has two optional schemes under section 115 BAA or BAB, where rates are kept lower. They can follow it. But if they are following this, they have to forego certain deductions and exemptions. Same like individuals and all. But for them, it was called default regime. But for domestic company, we are calling it as optional schemes. Is that clear? What are those? We will see. Domestic company, if they have opted for, means if they want, they will opt this. Section 115 BAA, tax rate is 22%. They have one more, BAB. If they are opting for this, what is the tax rate? 15%. But this is not available for every domestic company. This is available only for domestic manufacturing company, which has set up and registered on or after 1st October 2019 and commenced manufacturing or article before 31st March 2024. For which time period is already over. For which time period is already over. What is the tax rate? 15%. Then why are you teaching something which is outdated, sir? Guys, please be careful. If a domestic manufacturing company has set up their operation in between this date, even today for them tax rate is 15%. Even today, that is during our previous year also rate is 15%. The deadline was to set up manufacturing. If I continue manufacturing, can I follow same? Yes. Okay, this was done in order to support the Make in India scheme, guys. Okay, that is to support the manufacturing domestic company. I feel somewhere they should have extended this. There should not be a deadline there, but they have kept a deadline. Okay, they want to give benefit, but not forever. So only for certain years. Okay, guys. Hope you understood. Yes. Sir. Now, if a domestic company is following any of this, which we call it as optional scheme, then they also have to forego few exemptions and deductions, which I have given here. But you need not worry much about it. They are not a part of your intermediate syllabus. Yeah, yes, sir. Sir, what should we know then? Only the section and rate. That you know. That much is enough. Next. No, sir. Domestic company, they are not following optional scheme because for them, the exemptions and deductions, they want to claim. They want to claim. Then you can follow regular provisions of the Act. Regular provisions of the Act. Now, if you are following regular provisions of the Act, we need to identify whether you are a small domestic company or a big domestic company. How will I know whether I am a small or big, sir? Simple. Check your turnover in the year 23-24. Which year? 23-24. If your turnover in the year 23-24 is up to 400 crore, then you are considered a small domestic company. What is the tax rate applicable for you? 25%. Sir, what if it is more than 400 crore? Then you are a big domestic company, pay tax at 30%. Pay tax at 30%. Hope you guys are understanding, right? Whatever tax rates we are discussing is for which year? Our previous year, 25-26. You might get a doubt. Sir, then why should we check the turnover of 23-24? Now we are in which year? 25-26. Now, we should always know the rate before the year starts. Can I wait till the end of the year? Because I will get to know the turnover of 25-26 when? Only after the year end. So can I refer to 25-26 turnover? No. Now you might also ask me, sir, why not 24-25? Why not 24-25? Guys, 24-25 will end on 31st March 2025. But will we close books on 24-20 on 31st March only? No. See, we will close the books as on 31st March 2025. But literally, physically, will we close on 31st March only? No. People will take months together. Even in your company law, you would have seen AGM. When will the AGM be conducted? On 31st March or 1st April only? No. They have good amount of time. Why? Because they will take time to finalize the accounts. Finalize the accounts. I repeat, guys, books would be closed as on 31st March. But will it be closed on 31st March only? No, it will take time. It will take time. You know, not to tally the balance sheet and all, how easy. Okay. Hope you're understanding. Easy, what I am telling is difficult. So, sir, for we, one 10 adjustment, 5 adjustment will be there. For us, for that itself, we will find it difficult. In practical life, companies, you know how many adjustments they will have. Okay, but obviously they will be doing it on day-to-day basis. But closing books of accounts may not be so easy to close it in 1 or 2 days. Okay, and there will be a separate team to take care of this. Okay. In simple. Even if we consider the year 23, 24, 25, we will not know the turnover of 24, 25 on 1st April 25 itself. We will not know it. So that is why they are telling take 1 year before. That is 23, 24. Hope you guys understood. One more reason, one more logic of government is what happens is listen. If I take 24, 25, then some of the assessees assume their turnover is 410 just to pay less tax. At least 10 to 15 crore turnover, they will push it to next year. They will push it to next year. That book adjustment and all they will do. They are very brilliant in that. Okay, so that is why they are not taking this year. They are taking 1 year before, for which already books are closed. I already also told you guys, we should always know the rates applicable for us before the year starts, before the beginning of the previous year. So that is why 24-25 is not considered here. 23-24 is considered. Clear? And year to year it will change. That is why I have given in italics. Previously it was 22-23 for the last year. Clear? Whereas for your previous year, we need to take it for previous year 23-24. Okay. Fine. Easy, no? Yes. Let me just repeat this, guys. For domestic and foreign company. Okay. I will take the help of this chart. Now, for companies, what is the tax rate? Foreign company, no option, nothing. 35% pay the tax. That's all. Whereas for domestic company, they have two optional schemes. What are those, sir? Section 115 BAA. BAA, where the tax rate is 22%. Or PAB, which is available only for manufacturing companies. What is the tax rate? 15%. But you should have set up and start manufacturing in between those dates. Okay? Yes, sir. No, sir. I am not following optional scheme. Why? Because here I need to forego few deductions and exemptions. So I want to claim them. Then follow normal scheme. Normal scheme is as per the regular provisions. There, the tax rates depends on what was the turnover of the company in the financial year 23-24. We are deciding the tax rate for which year, people? 25-26. But we are referring to turnover of which year? 23-24. Okay. If it is up to 400 crore, we consider them as small domestic company. What is the tax rate? 25%. I have just mentioned that small companies. In the law, they have not used the word. Okay, this is only for your reference. Okay, when turnover is up to 400 crore, they are telling you are still small, pay tax at only 25%. Sir, what if the turnover is more than 400 crore? Then 30%. Then 30%. And one more important thing, see in the question, if they have clearly given the information, accordingly follow whatever is given. Sir, no, sir, they have just given domestic company and they have asked me to calculate tax. Just apply 30%. We don't have any other choice. Just apply 30%. Only when question is silent, when question is clear that domestic company is following so and so, like optional scheme, or their turnover is less than 400, please apply the respective rates. Yes, you can just make a note of this. I will show the first part first. Take down this. And then this. Yeah, we'll continue now. Come back to provision book. So company part we have discussed. Next, silence. Next, cooperative society. Cooperative society. Again, for them also slab rate is applicable, but rate is different. For them also slab rate, but rate is different. Up to 10,000, 10%. No basic agency limit for them. Then 10 to 20,000, 20%. More than 20,000, 30%. But even cooperative society has two optional schemes, which is given in section 115 BAE or BAD. Two optional schemes is there. If they want, they can follow optional scheme, but under optional scheme, there are few deductions and exemption which are blocked. If they don't want to follow optional scheme, then what can they do? They can follow normal scheme, which is regular provisions. Clear? This is the tax rates given under regular provisions or normal scheme. Now they have two optional scheme. Sir, what is the tax rate under that? I have given here. Tax rate in case of manufacturing cooperative society. Which cooperative society? Manufacturing. Resident in India. Set up and registered on or after 1st April 2023 and commences manufacture of article or thing before 31st March 24. Only 1 year time was given to set up and start manufacturing. Opting for concessional tax regime under section 115 BAE. What is the tax rate for him? 15% of the income derived from or incidental to manufacturing or production of an article or thing, guys. So please be careful. This optional scheme is available for whom? Only resident cooperative society who is engaged in manufacturing, who has set up and started manufacturing between 1st April 2023 and 31st March 2024. But if you have satisfied this, then even today, tax rate is 15%. Means still you have in operations. Clear? Yes, please be careful. Sir, rate was only for 1 year. No. Rate will continue 15%, but you should have started your business in between this stage. Oh, next you might ask me, sir, I am a resident cooperative society, but not engaged in manufacturing. Or else I am engaged in manufacturing, but I didn't start in between this date. Then for you, there is one more optional scheme, PAD. 115 PAD. Bad. How much? 22%. 22% is the tax rate size. You might be doing any business, but you should be resident. You should be resident cooperative society. So for cooperative society, what are the choices, guys? They have two optional schemes. Obviously, first choice would be this only, provided you are eligible. Okay, 15% rate. If you are not eligible for it, then check this. Follow. If not that also, then you will follow regular provisions or normal scheme, guys. Is that clear? Yes. And even this sections in detail is not covered for you. Even if a resident cooperative society is following this sections, which is called optional scheme, they have to forego few exemptions and deductions. Few exemptions and deductions. I have given the list here. But that is not a part of your intermediate syllabus, guys. You need not worry about it. See, then why are you teaching? Guys, rate you should know. Section rate you should know. That is a part of your syllabus. But what is allowed, what is not allowed, I have given here. But that is not in detail covered for you. I have given here for your reference. Yeah, but the list is almost same, guys. There are actually section 115 talks about few schemes. For individual HGF, AOP, BOI, and artificial juridical person, we call it as default scheme. Given under section 115 BAP. They also have to forego certain exemptions, deductions. Yes, sir. Then for domestic company, they are eligible for two optional scheme, BAA, BAB. Correct? They also have to forego certain exemptions deduction, but we call it as optional scheme. Same way for resident cooperative society, they have two optional schemes. Where is it? BAD and BAE. Yeah, they also have to forego certain exemption and deduction. We call this as what? Optional scheme. You might get confused with the scheme name. Please be careful. That is why I am repeating again and again. For individual HUF, AOP, BOI and artificial juridical person, default scheme is given under section 115 BAC, and that is the most important thing for your exams. Other things only the section rate is covered, whereas section 115 BAC in detail is covered for you. We will be seeing it again and again in the respective chapters. What is allowed? What is not allowed? What is allowed? What is not allowed? If the assessee is following default regime. Okay, guys. So till now, whatever we have seen is only the first type of tax rate. What is it? The tax rates applicable on normal income, which depends on the category of person and scheme selected by them. Here we have one more set of tax rate, which is the special rates applicable on special income, which we will see after the break. But before that, before I close, listen, I will just explain you the format to calculate tax liability, guys, which is after a few pages. Please come to this point. Yeah. It is in page number 38. Page number 38. Yeah, this is the format to calculate tax liability. Guys, we have to calculate tax liability on which figure? Total income. And whenever you are calculating tax, first thing you have to do is check whether total income has any special income. So first calculate tax on special income at what rate? Special rate, which we are yet to decide. We're yet to discuss and decide. Okay, sir. Then remaining will be considered as balance income, normal income, other income. All these are one and the same. Clear? The income which is taxable at normal rate is called balance income, other income, normal income. Okay, sir. For this, we need to apply either slab rate or flat rate, depending upon the category of person, as applicable. Okay, this will vary from person to person, scheme to scheme. Please be careful. If I add up both of this, I will get gross tax liability. There can be few questions where there is no special income at all. Then entire total income will be normal income. Guys, listen here. If question is silent about special income, they just told because as a total income of so much. They didn't mention anything about special income. Consider entire total income as normal income. Entire total income as normal income. This is only when question is silent. And sometimes question might be silent about the age of the individual. Assume less than 60. Assume less than 60. Sir, what if the question is silent about residential status? Assume the assessee is resident. Assume the assessee is resident. Next important thing. Sir, if question doesn't mention about the scheme for individual HUF, AOP and all, which scheme should you follow? Default. Default. Hope you guys are getting it. Sir, if question in clear, normally question will tell us which scheme the assessee is following. Accordingly, you need to follow that. Or sometimes in the exam, they may ask question for both. Do calculation for default, do calculation for optional, both. If by chance, if question is silent, please assume that assessee is following default regime and give a note for it. And anything you assume, that is only when question is silent. Sir, question is telling optional. I recall you telling default. You assume default. I wrote, sir has told me to follow default. I am following default. You will get 0 marks for it. Please be careful because when question is clear, follow that. Only when it is silent, you make an assumption and give a note about that assumption. Okay, let us continue. So if I add up this, we will get something called as gross tax liability. And from gross tax liability, there is something called as the rebate which is available. We call it as the relief tax relief. But this is available only for resident individual whose total income is within certain limits, like 5 lakh, 12 lakh and all, which we will learn later. So this is available only for resident individual. If an assessee is eligible, reduce. And after reducing it, if still some amount is left, for that we need to add 4% cess and pay the amount. I repeat, after claiming rebate, if it is nil, stop it there. Stop it there. No, sir, I claimed the rebate. After that, still 5,000 tax is there, sir. Then for that, I need to add 4% cess and pay to the. Clear? Yes. Then there is also something called as surcharge, which we call as additional tax. Actually, it is against the law, guys, because that is leading to tax on tax. Surcharge is leading to tax on tax, but still they are leaving it. Sir, surcharge is applicable when? Only when the income of the assessor is crossing certain limits, like 50 lakh, 1 crore, 2 crore. Means for a wealthy people, over and above tax, they are also leaving surcharge. And even surcharge is a part of income tax only. Clear? It is not outside income tax, it is a part of income taxes. Clear? This is only for those assessors who has income more than 50 lakh, 1 crore and up. Okay, na? And assume surcharge is applicable at 10%. We need to apply this 10% on what figure? Gross tax liability. Gross tax liability, not on income. Listen, we need to apply this rate on what figure? Income figure. Once I get gross tax, surcharge rate has to be applied on which figure? Gross tax. Assume gross tax is 1 lakh, surcharge rate is 10%. You need to apply on. Got it? Yes. And you might see, listen. I am giving a proper clarity. Rebate and surcharge simultaneously both will not come in the same case. Why, sir? Because rebate is available only when your total income is within 5 lakh or 12 lakh. Whereas surcharge is applicable only if your total income is more than 50 lakh, 1 crore, 2 crore, 10 crore, like that. Clear? Then why have you given here, sir? I have given it as a format. Clear? Everything may not come in every case. Clear? For example, if there is no special income, this will not come at all. If assessor is not eligible for rebate, then this point will not come at all. You need to skip this part. Clear? Yes, as a format I have given. If this comes, what to do? Okay, sir. And I repeat again, when surcharge is there, obviously rebate will not be there. Or when rebate is available, definitely surcharge will not be applicable. Yes. Either of the two. You will understand. Once I cover these two topics, you will understand the reason. Okay. Now, assuming rebate and all was not there. Okay, let me just close this game. So this will not come. Okay, sir. Gross tax liability is there. Assessee surcharge is applicable. Surcharge, assume 15% is applicable. 15% I need to apply it on one. This. Clear? So let me just take the figure so that you will understand properly. 1 lakh is the gross tax liability. On that, I'm just taking random figure. Okay, let me take 10 lakh only. Yeah. Let me take gross tax as 10 lakh. Surcharge assume is 15%. So 15% of 10 lakh comes to 1.5 lakh. So how much is this? 11.5 lakh. Health and education cess will always be levied at 4%. Always. Whenever a person is liable to pay tax, he has to pay health and education cess of 4%. 4% on what? In my example, 11.5. So 4% would be on 11.5 lakh into 4%. That is gross tax plus surcharge. Yeah. So ultimately, whatever you get, you need to pay this to the government. Pay this to the government. Hope you guys got it. Now, there is one more possibility. Sir, what if, just a minute. What if surcharge also is not applicable? Possibility is there. I am not eligible for rebate also. Surcharge also is not applicable. In that case, we need to skip this. We need to skip this part. Then, will 4% be applicable? Yes, for example, let me just take this as 80,000. 4% cess will be on how much? 80,000. 80,000 into 4% will be cess. Add that year and whatever you get, 80,000 plus cess. Pay that to the government. Pay that to the government. Hope you guys are getting. Guys, in the format I have given rebate and surcharge, but it will not be applicable always. Rebate is available. That is a relief given to the assessee only if the total income of the resident individual is within certain limit. Whereas surcharge is applicable only if total income is crossing certain limits. Means if it is more than certain limits. Okay. Even if by chance if any one of this is applicable, it is any one, not both simultaneously. Sir, is there a possibility that both are not applicable? Yes. There are possibilities that both are not applicable. We'll solve the questions. You will understand. Clear? Yes. As of now, we have not discussed the rebate and surcharge. Clear? So now, after this, we will take a break. We'll solve questions on the slab rates or whatever rates we have discussed. Then we will learn tax rates on special income. Then we will learn rebate. Then we will learn surcharge. Step by step, we will proceed further. Got it? Yes. Hope you understood the format. Clear? Yes. So we'll take a break. We'll continue after the break.